Are your trades being stopped out as soon as you enter? Well, if that's happening to you, it could be because you're using a static stop loss. In most normal market conditions, we're all taught to choose a stop loss and stick to it. But the current market conditions are far from normal. When you are trading in extreme volatile markets like we have in today, like that's like going on right now, this minute, no telling what just happened in the last 5 seconds I was talking, right? From everything that's happening in the economy, you have to make adjustments. You can't trade the same way you've been trading. Savvy traders know how to make adjustments to account for the volatile market conditions that we all have to deal with right now. And what you want to do is move to more of a dynamic stop loss than just a static stop loss. Also, if you're trading with a prop firm like Take Profit Trader, your stop loss and your risk management is the difference between passing the challenge and or keeping your funded account. So it is, figuring out your stop loss is high up on the, it's high, it's up there, all right? It's up there. It's very, 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 very important. We cover good risk management in our free guide, Finally Funded. And if you need help to pass that prop firm challenge, just comment below, give me the guide, and I will send that right over to you. See, I want you to be like this week's newly funded trader, Tiana, who was able to pass her prop firm challenge in just 4 days using the strategies that she got out of the guide. So in this video, we're going to talk about the best stop loss strategies to pass your funded challenge, to take advantage of all the volatile market conditions, and to begin to increase on the Sutton. So let's go deeper. All right, so today we're gonna do something a little different. I'm on a minute chart, and those of you who follow me, new to this channel, I trade on tick charts in the futures market. But I wanna go to a minute chart today because I think a lot of people generally trade on minute charts, hour charts, day charts. So I just wanna look at the minute chart. And let's just look at some basics, right? So the first thing, what's the basic rule for your stop? Most people, and see, I can't just say that, I can't just say most people because I don't know if that's true or not. But a 2-point stop is what I was always taught, right? So a lot of people will go in the futures market, trying to get away with a 2-point stop. Man, and back in the day, a 2-point stop was actually, that's a pretty big stop. Well, I guess it's never been big, but it would do the trick, right? A 2-point stop, let's say you want to enter here, let's see if a 2-point stop, well, this is probably gonna make my point that now you can't just get away with that, but see a 2-point stop, see we entered here at, this would be 82.25, so 84.25 is our 2 points. Which is, wow, right here, right? OBKB. So as we see, a 2-point stop ain't much of nothing no more. That's right here, okay? That's not gonna fly. All right, so let me start over in case I confused everybody. So if you wanted to enter here, back in the day, a 2-point stop would work. And back in the day, a 2-point stop would have your stop up here, right? Which is where you want it. If this is your signal candle, a basic rule is if you have a signal candle, you put your stop a tick, in this case, a tick above the stem, right? That was where your stop will go. And in a normal market condition, that would be 2 points. Normal market condition, a lot of times that would be 2 points. But as we just saw in this volatile market condition, 2 points is right there. And guess what? That's just not gonna fly right now. Not in these markets, because look at the size of the very next candle. You didn't stand a chance, all right? So right out the gate, you have to understand the market has changed, all right? It's very volatile. And if you're still trying to get away with a 2-point stop, that's why you're getting stopped out immediately, right? So unfortunately, you can't go with that. You can't just go with a static 2-point stop in this market condition. Now you can, but expect for your losses to increase, right? And that could be part of your strategy. Because hey, you may say, hey, I'm gonna keep risking this 2 points until it won't work and I catch 20 points. If that's your strategy, that's your strategy. But most people can't take losses like that, right? Or don't want to, right? Most people don't want to just be entering and you lose as soon as you enter. Most times, that's just most people can't handle the stress of that. So if the rule is to get your stop above the candle, that rule doesn't change. I mean, that's the rule. If this is your signal candle, your safest place to put your stop is anywhere up in this area. So you can't change the rules. So what do you have to do? You have to make adjustments. So on this particular trade right here, if we want to enter at 82.50, our stop has to go to 89. I mean, man, that's 6.5, right? That is 6.5 points. That is 6.5 points. Okay. Now you may be saying, I don't want to risk 6.5 points, and I get it. I don't want to risk 6.5 points. But in this market condition, you have to, because what you have to understand, and it's all relative though, because yeah, you got to risk 6.5, but because of the volatility, right? Let's say you just catch this run down here, you get knocked out right here. I mean, yeah, you got in at 82.25 or 82.50. Let's just say you get knocked out right here when this one comes back at 51. All right, so we're talking 82 minus 51. We're talking about a 31-point run. So yeah, you risk 6 points, but hey, you caught a 30-point run. So in this volatile market condition, you're gonna have to make adjustments, but it could be worth it. All right, it could really be worth it, you know, to stay alive, right? Because this was a great entry. You stay alive, catch this 30-point run, that's awesome. But again, the bottom line is you got to make adjustments right now. All right, the 2-point stop ain't gonna work. You needed 6, right? But if you did the 6, you caught 30. That's the trade-off. That's the trade-off, right? Now, the next thing I want to talk about is, let's say you make that adjustment and you run it. So now you could use a trailing stop, right, on your trades, and you can set that up. Just about every platform has to where you can set a trailing stop automatically. But I typically don't like trailing stops because, you know, the trailing stop is, you have to set it up to say, all right, trail for every 5 points, you know, up, you know, lock in 5 points, right? And that could work. That could work. But again, in these volatile market conditions, you're going to have these big swings, right? You're going to have these big swings back. And so what's happening is, if you got that trailer, you know, only giving you 5-point cushion, hey, that trail going to get knocked out real fast, okay? So as an alternative, and this is just basic price action, after you've entered here and you've caught this run, the very best place to trail a trend is at the swings. So as soon as we break lower and you get this swing and it drops, put your stop here. Sit tight. Wait for the next swing. We come down, we push up, and then we drop, put your stop right here. Wait for the next swing, right? Then this one pushes down, and unfortunately, it comes and gets you, so you get stopped out right here. But at least you made it to here, where if you had a 5-point trailer, let's see how that would have played out. You would have entered here. You would have went up 5 points, right? It would have been coming down. You wouldn't even got out of here. From this low right here, 74, to here is 83. That's almost 10 points. So you would have entered here, and with that trailing stop, man, you wouldn't even made it. You wouldn't even made another 21 MA. You would have just blew a great, awesome trade, right? So this 30-point trade that we were just looking at, you wouldn't have gotten that, all because you're using a trailing stop. So you do want to trail your trades, but you want to do it yourself, right? In my opinion, because if you use, now you could give it more space. I use the example of 5. You can give it more space, you know, and that may be what you want to do. And as a matter of fact, that is exactly what you do. So if you do want to automate it, I would say, hey, I'll put that sucker at probably about 15 right now. 10 or 15. I'm thinking 15 just to give my trade room to run because I'm trying to catch this 30-pointer, right? I'm trying to catch this 30-pointer. So for me, it'd be better just to manually lock in behind here. But if you can't, then yeah, you can set up a trailing stop, you know, but right now, again, you have to make adjustments. If you think 5 is gonna work, no, you need 10. You know, you need a cushion of 10 or 15. Like, hey, every 15 points, lock in, you know, trail behind it 5 points, or trail behind it 10 points, or trail behind it 15 points. That's basically what you're trying to do, you know, in this situation. You just want to trail behind it, all right? But we need to talk about funded accounts. And again, you know, we have a wonderful guide. It's free. You know, it's called Finally Funded. Many people have downloaded it, said it's great, and has truly helped their trading. So if you're trying to pass a prop firm challenge, just comment below, give me the guide, and I'll send you over a copy. So here's the thing when you're trying to pass a funded challenge, though. You want to lock in profits, right? Because depending on if you're dealing with an intraday, drawdown, or whatever the case, you know, if you go up $1,000, right? And on that 50K, let's say, you know, you start at 50K, you can't go under like 47,000, right? But if you go up 1,000, your bottom number is trailing you up. So now you can't lose more than 48,000, right? So what you don't want to do is go up 1,000 and then only make like one tick or only make $5 because now you only up $5, but your trailing number is no longer 47,000. It's now 48,000, right? So when you're trying to do a prop firm challenge, it's highly important that you lock in profits as you are going, right? That's why I said, you know, here, I'm trying to lock in here because I'm not trying to give back profits because it could hurt me in the long run. If I go through a little losing spell and you in your head, you think you got a cushion of 47K, nah, you've been up. So now it's actually 48K, all right? And this is even more important once you're funded, all right? Once you're funded and you have not gotten to that buffer yet, oh, no. Forget a trailer stop. I mean, you get up, you lock in tight. You get up, you lock in tight because in a funded challenge, especially with Take Profit Trader, because it's intraday and it's on your unrealized gains. So again, let's start, say you got a 50K account, right? Your buffer is, you're trying to get 3K, right? So your buffer is 53,000. And let's say you're in a trade, like this trade here was 30 points. Let's say we was at 5 contracts, 30 points times 5, 250 a point. You know, we're talking about 7,500, right? Just saying, $7,500 is what this would have been worth if you played it just right. But let's say, you know, you went up. Let's just say you went up $3,000, right? Real fast. This thing dropped. You was up $3,000. You was up 3K. You was up 3K. You locked in a tick. You just stayed back. And then this thing comes all the way back down and knocks you out to that tick. You just blew your account. Ain't that crazy? Because you started at 50K. You couldn't go down to 47K. But when you went up 3K, your trail and drawdown went up to 50K because you was up 3,000. You was up 3,000. So if you only get this tick, now, if your very next trade, if you lose, or I mean, if you just go down a couple points, it's over because you're going to hit that 50K. And a lot of people lose funded accounts like this because they don't understand that the intraday drawdown is based on your unrealized gains. Your unrealized gains. You don't have to, if you went up at all, if you went up $2, your trailing drawdown went up. You know, it ain't 47,000 no more. It's 40,002, right? You can't hit this number or to be over. So that unrealized gains gets a lot of people in trouble. A lot of people lose funded accounts. Now, I get this question all the time. Once you get to 53 though, let's say you in that same situation, but when it ran up, you was locking in and you made 3,000. Let me stop. You made 3K, right? So now your trailing drawdown is gonna stop at 50,000. You don't have to worry about it no more. It's not trailing you anymore. So now everything over 3K, you good, right? You ain't gotta worry about it. As long as you never see 50,000 again, as long as you don't let the account drop back down to 50,000 again, you will keep that funded account, right? So this is why I tell people to, hey, once you get to the 3K buffer, I like to add another at least 1K on top of that. You know, give me some more cushion. And then everything over 4K, I snatch off daily. And that's the beauty of Take Profit Trader. You can snatch off daily, but you have to get to this buffer. I would add another little buffer on top of that. And then, you know, you're safe. But my point to all of this is to tell you, you know, be careful with trailing when you have a funded account, because we're in volatile market conditions. You know, you can be up, you know, 20 points 1 second and down 20 points the next. All right. We are seeing 100-point move days every single day in the market. And that's just madness. All right. So as a trader, as a savvy trader, you need to make adjustments, right? The 2-point stop may not be flying right now, right? You may need 6, all right? And then on top of that, if you have a funded account and you haven't made it to the buffer yet, hey, those unrealized gains, you know, you may need to take some base hits till you get to your buffer, get past it. Then you can see if you can catch that 100-point run and let it run, right? But I would take base hits until I get to that buffer. Then if you like to take the longer shots, go ahead and do that, right? That's fine. Now, here's a major key point that I just want to wrap this video up with. That's also in the free guide, Finally Funded. If you need a free guide, not if you need a free guide, but if you need help to pass your funded challenge, hey, comment below, give me the guide, Finally Funded, it can help. And this is something that's in this guide. Now, here's the thing. 6 points in a funded challenge, that may be too heavy, right? That may be too heavy. And I know you're not gonna like this, but I'm gonna say it anyway, because it's the best thing for you. Sometimes medicine is nasty, right? It's the best thing for you. If 6 points would be too heavy, like you would either lose too much, you could possibly, you know, you can only lose so much on a 50K account, you can only lose 1,500 in a day, right? So risking 6 points at 5 contracts, that's out of the question, all right? Maybe even 1 contract at 6 points would be out of the question, all right? For your trader style. If you need more room, because the thing about the beauty of futures is that some things are absolute, like, hey, 1 contract on the ES futures market, 1 point is $50. That ain't changing, right? That ain't changing. But if you need 6 points, you know, 6 times 50 bucks, you know, now you're risking $300 a trade. You may not want to do that. Might be too heavy for your trader strategy. If it is, there is an answer. And that's to go to the MES, right? That's the trade micros. Now, you know what I'm saying, 6 points at $5 a point, you know, it's only $30, right? And then now you can scale up more. You can add more contracts. Now you maybe can go 5 contracts, you know what I'm saying? And that's $25 a point. And if you need 6 points, now you only risking, was that right? $25 a point. Yeah. And you need 6 points. Yeah. Now you're only risking $150. Hey, that's better than 300. So again, in this volatile market condition, adjustments may need to be made, right? And if the ES is just way too volatile, consider the MES. You still will be making money because remember, these runs are crazy. So, you know, even on the MES, if you do 5 contracts and you only risk at $25 a point, you risk 6 points, you risk 150. But again, if it goes that 30 points, 30 times 25, you still just made $750 an hour. Listen, don't be greedy. Don't be greedy. That's all I really can say, because the opportunity is still there. This volatile market is there's tons of opportunity, tons and tons of opportunity. But a 2-point stop might not work. And if you need a 6-point stop or an 8-point stop or a 5-point stop, consider dropping down to micros. Trust me, it trucks just like the ES trucks. I have been able to get funded trading micros. I've been able to keep funded accounts much longer. Trust me on this. On micros, do not shoot down micros. You can make a living trading micros just like you can make a living trading the ES, all right? And it would be much better to be in micros, putting your stop where it goes, trading your same strategy that you're used to and comfortable with, that you have success with, that you know how to do, rather than just, hey, I'm just gonna still keep trying to risk these 2 points in this highly volatile market. Hey, maybe you catch one. Maybe you catch one before you blow your account. Maybe. Chances are you're gonna blow your account and then you'll catch it, because that's Murphy's Law. I'm just saying. But make the proper adjustments, right? Take base hits when you can, and understand that, hey, there's certain different ways that you can trail a trade. If automation is what you want, you can set that up. I prefer personally to stay behind the swings. I think I have the best opportunity to stay alive, to make the most money. That's me. Test is all you need to do, right? You need to test this out to see what's going to be working best. But just understand, in these volatile markets, a lot of people are being greedy, and a lot of people are blowing funded accounts for no reason, all because they just haven't made some simple adjustments. But you got to make some simple adjustments, all right? So that's going to wrap it up for this one. I greatly appreciate you guys hanging out. And again, if you need help passing your funded challenge, just comment below, give me the guide. I'll send that copy out to you right away. And until next time, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.